Hello, everybody, and thank you so much for joining us. And welcome to this webinar, Balancing Relationships in AI, What Investors Value in Financial Advisors. My name is Thomas Aviles. I'm Vice President of Enterprise Advisor Solutions here at Morningstar. And I'll be your moderator today, but also be sharing the perspective of the 185,000 financial advisors that utilize our technology and tools to help them better serve their clients. So I spend all day talking to advisors and the challenges they have, and I'm joined by two terrific researchers who also talk to advisors all day and also study them a little bit more closely. And I'd like to give them the opportunity to introduce themselves as well.
Yeah. Hi, everyone. My name is Samantha Lamas, Senior Behavior Researcher here at Morningstar.
And I'm Dr. Danielle Labotka, and I'm a behavioral scientist here at Morningstar.
Yep. So sure to be a great conversation that we're going to have today, but just a few housekeeping items for today's webinar. So one is the session will be recorded. So everyone who's registered will actually receive an email following the session with the recording. And if you register in the future, you'll be able to access it as well. And we will have moments for engagement, actually. So they should be able to, in the Q&A section, ask some questions, and we'll save some questions at the end. And we should have enough time to be able to do that. But there's a lot of information that we have to cover. So let's go ahead and jump in. So Sam and Danielle, thank you so much. And something that we're all experiencing right now, we're all thinking about is how technology and AI is going to affect our lives and our work. And it seems to be impacting us in all sorts of ways, right? And it's no different for financial advisors, right? So there's a lot being said about how AI is going to impact the financial advice space, but what does the research say, right? So I know that you both have done a lot of research on this topic. So how is technology really going to impact financial advisors?
Well, when it comes to that question, I think we can look to the past a bit more, because this story of technology making waves in financial industry is not necessarily new. And advisors have always been able to adapt and improve. They've always had this complicated but fruitful relationship with technology where they can just refocus their efforts on what they can uniquely provide to individual investors. And to a large extent, advisors have always persevered. I think the latest example is robo-advisors, that for a while were supposed to completely replace advisors just a couple years ago, and that really hasn't come about. But yeah, I think advisors are going to persevere.
Yeah, and it seems like they really do play a critical, point of value right now, especially given the environment that investors are in, because it's a quite noisy environment. I mean, the things that I'm seeing in some of the conversations that we have with advisors is that they really have to be the expert on more than they ever have before, because their clients are being just fed a lot of investment ideas these days, right? It's not just their friends or their dentist, right, giving them investment ideas. It's also algorithms at the palm of their hand that know how to grab their attention and grab their emotion. And so they're just fielding more of these questions. So is it, do you see that as advisors being that point of value in this sort of new, noisy environment?
Oh, definitely. If anything, sure, technology has helped investors in a lot of ways, have opened up investing to a lot of people, but in a lot of ways, it's made investing even more difficult because there's so many options, there's so many tools, there's so much accessibility, and advisors can really help investors make sense of all that noise. I think advisors are still definitely have a place in this market.
Yeah, well, it goes back to, I think, a lot of the research that we had on Gamma, right? And I think that other firms have different names for it, but really trying to quantify the value that advisors bring to their clients. And so it's beyond just investment selection. It's, it's behavioral coaching, it's portfolio optimization, it's tax strategies, and everything in between. But I think that study originally came out in 2013, so a lot has changed, right, since then, in understanding, the value that advisors bring, because it seems like also investor preferences have changed a lot. And, I know, Danielle, you've done a lot of research on trying to uncover what are the preferences of investors, but it sounds like that's a harder question to answer than people may realize.
Yeah, so the study that we're going to be talking about today really is geared towards understanding those investor preferences. But unfortunately, as you're pointing to, it's kind of difficult to measure preferences. And the reason for that is that we're strangers to ourselves. This is something you might hear behavioral scientists say, and you're like, cool, you don't know me, so how do you know what I think about myself? What we mean when we say that is that people tend to have preferences, motivations, beliefs that they may not be explicitly aware of. And I don't just mean like people the people out there who need help. I mean, like me too, and Sam and you, we all have this. And because we're not necessarily aware of these things, it can really take a lot of time to dig into what we're really thinking. So if you're an advisor out there and you're trying to understand how you can better distinguish your practice from AI, you might go and say, okay, I know these clients I'm working with, they really value me. Let me ask them, what do you value about working with me? And the problem with that is that you might not get a very honest answer. And it's not because your clients are trying to lie to you or hide the truth in any sort of way, but it's because they don't know. They don't know necessarily what is the main thing they value in working with you. And there's a couple reasons for it. It all comes back to being human, right? And so, like I said, it takes time to dig into these things because we don't necessarily know them right off the top of our head. And because we don't want to just like pause in the middle of a conversation and just like not answer a question. I'm sure you would be mortified if I just stopped talking to you right now.
Thought carefully.
Yeah. Like, I don't think any of us would enjoy that. But because of that, we want to answer as quickly as possible. And so we might take mental shortcuts in order to answer that. So for example, if you say, hey, what do you like about working with me? What do you value? Well, maybe earlier on in that conversation, we talked about all the different strategies you were using as an advisor to save them money on taxes. And suddenly, well, wouldn't you know it? Oh, I really appreciate all the tax saving you do for me. Well, that's because of something called the availability heuristic. Hey, you just mentioned this. It's at the top of my mind. Now it seems really important. You're asking me what's important, so I'll say that, even if that's not the full answer, right? They might value it, but it might not be the main value add. But then we have this other layer where sometimes as people, we might not tell the truth because it doesn't make us sound really good. This is something called the social desirability bias, where we tell people what we think they want to hear. So maybe your client says, hey, I like the tax savings that you give me. Maybe they're saying that because, well, they think it makes them sound savvy. It makes them sound like somebody who is smart for working with a financial advisor, when the true response might be something less flattering, like, yeah, I really like it when you hold my hand when the market's going crazy and I need to be like stopped from making a mistake.
Right.
So I think that like you probably have seen this before, where people maybe don't necessarily know what their actual preferences or desires are.
Yeah. So it does seem like the process for asking questions and even the words that we use seem to have a really big impact on the answer. You know, a perfect example, I was visiting family down in Texas, and I happened to also, meet with some financial advisors when I was down there. And I had asked them, I said, hey, do you have any ESG initiatives, for example, since that was the focus of sort of the time and the conversations they were having. And they literally laughed in my face. They said, hey, this is Texas. We don't have any ESG initiatives here.
Of course not.
But I asked them, I said, hey, do you have any clients that have strong, religious convictions that wouldn't want to be invested in things like stem cells or tobacco or gambling? Because I know that they did work with some religious organizations, and they said that they did. So it turned out that data, while it's labeled as ESG, which can have a lot of baggage, it was really just, do your clients value, their money impacting the world, right? Do they want their money to be aligned with their values? And the reality that it was. So, it's across the value spectrum on how we make those investment decisions. And so it was just a simple reframing of how we asked the question, which uncovered something that was really important for them, right? And so it just examples like that I'm really interested in. And I'm just interested to hear from you too. Maybe what's the methodology behind actually trying to unlock the proper preferences for investors?
Yeah, well, you kind of already tapped into the methodology, which is to have different ways of asking it, basically to collect evidence from different tests and see where they converge. And so basically the idea behind that is that when we have converging evidence, we have more reason to believe that something is real, that something is true. So an example I like to use here is from astrophysics, which is that we know dark matter exists, right? You ask any astrophysicist in the world, they're probably going to tell you, yes, it exists. Well, how do they know that? We've never seen dark matter. We've never held it or measured it directly. But we know from galaxies spinning that some of them are spinning faster than they should be unless there is some unseen mass. And we know from watching light trajectory that it's bending towards unseen masses in different cases. So we have different methodologies here that are telling us the same thing, which is that there is some unseen, very dense matter out there that we need to account for. And it's very similar, ironically, to what we do in behavioral science. A lot of the time, we're measuring preferences, right? Well, I can't actually go out and look at your preferences or weigh them or determine what they're comprised of directly. So instead, we have to rely on multiple methodologies that can come together and tell us what the picture is above and beyond the noise. So the nice thing about this too is that since we have different methodologies, we get insight not just into what people are thinking, but how they're thinking it, why they're thinking it. And that can also really help us give advice to advisors to understand how they should respond in relation to that. So I talked a lot about this kind of in an abstract, theoretical way, but we are talking about like a particular study here and how advisors can recognize their value to investors. And so I want to talk about the different studies that we're going to be talking about today. So we have 3 different methodologies across 4 studies that we're talking about. And so the first one is going to be a ranking study. And in this study, we asked people, here's a list of characteristics, attributes, activities that an advisor will do. Tell us, rank from 1 to, 15 maybe?
Yep, 15.
1 to 15, what do you value most in working with an advisor? And so the nice thing about this is that this study was actually one that we ran back in 2018. And this time around, we ran it in 2024. And so in some ways, this is a replication. So strength here is that, we saw the same results twice, basically. And so that has a good indication that what we're seeing is true. But also, it's nice because that list allows people to really see, hey, I didn't really realize my advisor was doing this, or I forgot that my advisor was doing this. Oftentimes advisors, I say, are a black box to their clients because they don't necessarily think about or are aware of all the things their advisor does. And that's kind of by design, right? They're hiring you to do something. So they probably don't want to be thinking about it all the time. But on the downside to that, getting the list can lead to priming, which is where when you give somebody a certain stimulus, it might take a little bit more precedence than it normally would. And so they might focus on it a little bit more than they might actually care about it. So that's one study. That's the strengths and weaknesses there. Another study we did was a willingness to pay study, where we gave people a couple of descriptions of different activities an advisor might do for them. And we said, hey, how much money are you willing to pay this advisor per hour? And so then they wrote in however much money they thought they would pay them per hour. And that's a great study because it is a little bit more fine-tuned in terms of the responses we can get from them. We're not just saying, oh, yes, no, I like that. This is the dollar amount I'm willing to pay them. And they can also give the same dollar amount for different activities, which is a little bit different than the ranking study. Another benefit to this study was that we really described what the advisor was doing here. We tried to give them a sense of what the actual action is, because in the list study, we really had to keep it short, right? They do behavioral coaching. Well, what does that mean? It might not necessarily mean anything to a client. And so in illustrating it a little bit more, then you can actually say, oh, I would really like it if my advisor did that for me. But the downside to that is that it's kind of more intensive, right? You got to read more, you got to think more about what you're putting. And so we asked fewer questions there, which is kind of a limitation. And then our last 2 studies both used open text. So in one study, we asked people why they hired their advisor, and in another study, we asked them why they keep their advisor. And so they just had a box and they could write as much or as little as they wanted. And so some of the benefits there is that people have their own time, space, anonymity, so they can really write what they want to write. And that kind of counteracts some of those issues we were talking about at the beginning of why is it so hard to nail down investor preferences when you're just asking for them? We also didn't give them any other information, right? So there's not that priming issue that maybe we have in another study. But we're just asking them to write. And so it really is dependent on that every participant gives what they want to give. So some are going to write a lot and some are going to write very little. So as you can see, there are some strengths and weaknesses to all of them. But when we put them together and when we look at the findings across all of these different studies, then we can start to get a sense for, okay, what do investors really value in an advisor? And how can advisors leverage that to stand out above and beyond what AI can provide investors?
Right. So thank you for going through those methodologies. And I think the audience is really excited to see some of the results, right? So with all these different methodologies in these studies, what does it say?
Yeah. Let's take a look. So I know we should be showing a slide right now. And this slide here shows our results by each of the methodologies that Danielle just pointed out. So at the very top, We have the ranking study. These were the attributes that investors ranked most important on average. So they wanted an advisor that helped them reach their financial goals, maximize their returns, had the relevant skills and knowledge. Makes sense, nothing too surprising here. And the willingness to pay, these were the behaviors they were willing to pay the most for. So when their advisor evaluated research options for them, reviewed their accounts to provide personalized recommendations, reviewed their behavior to provide personalized recommendations, and then help them brainstorm and identify financial goals. In the open text, we have a few that overlap here, but the topics that kept coming up when people wrote why they hired, why they kept their financial advisor were that their advisor provided comfort by having the skills that they don't have, by having the knowledge that they don't have, by resolving specific financial needs, helping them act in ways beneficial to their finances, good advice and services, and then good advice and services in particular when it helped them reach their financial goals. It's a lot to take in, but right off the bat, you can probably see that these aren't all saying the same thing. No. And that is not a mistake. It's just that our methodology is pulling out different perspectives of what investors value in a financial advisor. I kind of think of it as pulling back the layers. I always think of an onion, which is
It's a Shrek reference.
It's a Shrek reference, yeah. Of the layers of people's preferences. Each of them are important, but it may change how we address each of those layers.
So, and how do we make sense of all that? Because I think even when you were sharing the details about the methodology, it seemed, even sharing the example of, full open text. So you're sort of sifting through all sorts of interesting information, which sounds quite difficult. So how do we make sense of all these results?
Yeah, and we were kind of in the same boat. When we first saw the results and saw that there were some similar but contrasting results, we were kind of at a loss of what to do with it. But what we ended up doing is pulling out these key themes by incorporating some of these preferences together, and we created a mind map. And we should be showing that here on the screen as well.
Okay,
This is a lot to take in, but we're going to walk through it pretty much for the rest of the session, but I'll give you the overview right now. So those 4 themes that we were able to uncover by grouping these attributes together were advice I can rely on, helps me reach my financial goals, keeps me on track, and maximizes my returns. So as you can see, underneath each of these themes are the attributes that pertain to each. And from the combination of these attributes and these themes, we start to get an idea of not only what investors value, but why investors value it. And that's going to help us understand how advisors can address it and use it to differentiate themselves from Gen AI. Last note about this mind map from a high level is that you can see that some of these themes are a different size. And the size is actually dependent on how much evidence we have for each of these themes. Those 2 in particular that are much smaller, they're much smaller because we actually didn't see them in all of our studies. And we'll go into why that was too. But again, it was because we were capturing this particular perspective of what investors value.
Well, something that really stands out to me looking at the mind map here is the point on returns. When I'm having conversations with clients, it seems like that is still a lot of focus of the relationship of how they, put their quarterly check-ins, for example, or how, investors or their clients ask those questions. And so it's just interesting to think about all the different things that advisors do besides just, provide returns for their clients. And so how can we put that against the other kind of value propositions that advisors have, right? So besides just returns, what are some of the other value points that we see? Because I saw that, for example, with another research study that we had with Joe Agostinelli, who your audience may be familiar with as well from other webinars on Voice of the Advisor, was returns came up again. So it's just an interesting thing that continues to come up, and I'm balancing that with some of the other value points that advisors keep working through.
Yeah, I don't think any advisor is either surprised or super excited to see returns show up as one of the value adds here. But, returns aren't going to go away. At the same time, Sam already alluded to this a little bit, but there's the least amount of evidence here is for the returns. And we think that what we're seeing here is that study where returns came up is one where we gave them the list, right? So they were kind of primed to think about returns. And it's really telling, I think, that when you show people returns, you remind them of it, they're like, oh yeah, returns, those really matter. That's what I'm looking for. I'm looking for good returns. So basically, returns are really attention grabbing. And that might not necessarily reflect how people actually feel about them in their daily lives, but it's really attention grabbing. And we see that in technology too, right? I'm sure if any one of us signed into an account right now, we would be greeted with a big number at the top with green or red, depending on how today's going, and an arrow up or down that corresponds with it, right? It says, pay attention to me, pay attention to me. And I think technology kind of plays into that tendency for people to get really fixated on returns by reminding them about it. And that can lead to returns chasing, when we're trying to time the market, and things typically don't go well for investors when they do that. It usually makes them lose money. And I think that's what's interesting is that AI kind of plays into this too. Because if I'm an investor and I'm already focusing on returns because I just looked at my account, and then I'm looking for advice, I go to AI, I go to ChatGPT, I type in, my returns are down X amount year over year. What am I supposed to do about it? And the AI is going to give back stuff about returns, right? It's asked about returns. It's going to respond with returns. The AI is not back there being like, well, yeah, we should redirect because, we really don't want them returns chasing. The AI doesn't do that. It's basically very, very complicated, autocomplete. And so, you asked me about returns. Here's how people talk about returns. And so I think that's where we start to see, advisors can distinguish here, not because advisors can come in and say, I can get you better returns than that portfolio you got constructed by ChatGPT. Maybe that's true. I haven't tried that exercise of getting my portfolio constructed by ChatGPT, but that's not how I want advisors to think about this as a way to distinguish from AI, but rather from saying, I have the context that AI does not have. I know that people are prone to getting overly fixated on returns, which can lead to bad decisions. And I know my clients. I have a relationship with them. So I understand why they are investing, right? Oftentimes I think it can when we talk about returns, people are like, well, clients care about returns. They care about returns. That's true, but your clients are not Scrooge McDuck looking to swim through a pile of gold coins of a certain amount, right? It's not so much about that number. It's about what they can do with the number, right? What are their goals? What are the values that they're trying to live in line with when it comes to their wealth? And that's something that advisors can remind clients of when they get overly fixated on returns. When we're talking about your quarterly check-in, right? It shouldn't necessarily be here's your performance report, but here's your progress report. Here's how we are in terms of progress towards your goals. Are we on track? Are we not on track? And giving that context for people can really help them disengage from that fixation on it. And that's really important when markets go awry, which I think we all experienced just maybe a month ago, right? It happens, it's going to happen. And when the markets go awry, the numbers are red, the arrow is down, it feels really bad, but having an advisor who can redirect, reframe the conversation. Yes, things look bad right now, but let's take a look at the big picture for you. Do we still think that you're going to be on track to retire at the age that you want? Do we think that you're going to be able to take that trip with your family that you were planning on for next year? And I think that context really provides a lot of value for people. And so that is something that advisors provide that helps their clients stay more committed to their plans and helps them stay more satisfied with their outcomes. And I think that's a big place to distinguish, even if it feels like, well, returns shouldn't be a place where I distinguish from AI.
Right. So it seems like the context really matters, right? And the number may be red or green, but is that good or bad? Is it compared to the S&P 500? Is it compared to another benchmark that they were using? Is it compared to their financial plan and the expectations that they had for it? So it seems like that conversation, though, even if you're providing context, can be difficult. Does it require some sort of coaching, maybe behavioral coaching, for example, which I know is your area of expertise,
Our favorite thing.
that advisors and clients could benefit from?
Go ahead.
Yeah. Just a little bit more on the behavioral coaching side. How can they kind of add a little bit more around returns or other points of value as relates to coaching?
And behavioral coaching we did see. So we didn't call it behavioral coaching in our mind map. We called it advice I can rely on. But behavioral coaching was sort of a weird topic in this study, and you can see it because it was smaller, even though it's so impactful for individual investors. You can see that a lot of investors still don't quite recognize its value. And the one that it was particularly missing from was the ranking study. But again, the ranking study was unique in that it kind of scraped off the top layer of people's preferences. It gave us their top of mind values of what they value in a financial advisor. And because of that, maybe we're not digging a little deeper. And when it comes to behavioral coaching, it's important to note that behavioral coaching is essential for advisors to provide to their clients. And another thing that we can talk about here is the fact that framing matters. So when it came to the ranking study, we had a specific frame for describing behavioral coaching. And we saw that investors didn't quite love that framing. But we saw things change when it came to the willingness to pay study. So when we gave people examples of what their advisor acting as a behavioral coach was, we started to see people start to value it a bit more, start to move up the ranks. And when we gave people that open space and the why they hired, why they keep their financial advisor, we started to see a lot of people mention things that were behavioral coaching, but they didn't use that exact framing. So they said things like, help me stay disciplined, right? Was that sane voice during erratic markets? Was someone to bounce ideas off of? So in this instance, it's hard to see where Gen AI can replace this value. Because as we were talking about earlier, there are many instances where Gen AI can make mistakes easier to make. As Danielle was just talking about, we can all be looking at our phones right now and see our one-day returns. We can make a trade with just a few taps on our phones. Again, making it easier to make mistakes. So advisors can be that buffer, that decision-making support that investors need. I think the trick here, and what we really learned in the ranking study, is that we can't call it behavioral coaching.
Right.
I don't think people are comfortable with the idea that we need support with our behaviors when it comes to making financial decisions. This comes back to that social desirability bias that Danielle mentioned earlier. But there are plenty of other things we can do. Maybe we can call it being a financial partner, where we're being the buffer to making decisions. Maybe it's about providing financial literacy to train clients on how to make better financial decisions. Maybe it's about developing a plan to make decisions under stress, which would have really came in handy in the first half of this year. Or maybe it's about doing future visualization exercises, goal generation exercises, these things that help a person look internally when making decisions a bit more.
Right. So it seems like, again, the words of the process and the domain expertise, right? So, and it just seems like advisors having those closer relationships just have a little bit more understanding of what their clients are going through and how to use the proper words to coach them. So maybe not calling it behavioral coaching, but it seems like a lot of the elements are around financial planning. I mean, that's obviously a theme that's sort of a mega trend for the past decade that we've seen. And but it's interesting to see in the conversation that I've been having that as much focus as there is on financial planning, it seems like we're still a long way from, for example, every single client of an advisor having a financial plan. You know, I've worked with large firms where maybe 20% adoption is quite generous even, which is a really shame to see. And so, you know, thinking about maybe some of the hurdles that we see in financial planning being better adopted goes back to some of the things that you shared about the challenges of uncovering goals, for example. I know goals was something that had came up as a result of this study too. So, you know, maybe I think Danielle, you had a little bit more information on goals and how that fits here.
Yeah, and I think that, you know, we know that goals are a very powerful tool when it comes to financial planning. And as you're pointing to, maybe sometimes it can be hard to have that adoption as much as you would like it to be. But what our findings here really suggest is that this is an area that you want to be able to focus on and want to start differentiating yourself on, because we saw that people appreciated goals. And it wasn't just, I appreciate my advisor because they allowed me to hit my goal, right? That seems like such a no-brainer, but it was that we saw in different studies that it was more than that. It was, I appreciate having somebody who can help me figure out what my goals are, because I don't necessarily know that. That comes back to what we talked about, right? Strangers to ourselves. If you ask somebody off the street, like, what's your top financial goal right now? Maybe that'll be the follow-up to this webinar. We just like run around with a microphone and say, hey, for $5, tell me what your top financial goal is. And I'm sure people won't have.
People will say retirement.
Maybe.
Very vague.
If they even remember that, right? And so people appreciate getting help with their goals, but they also appreciate getting help along the way. You know, having somebody who can help them identify different opportunities, who maybe can help adjust to new goals that they might have, that maybe means that they have to balance those previous goals in different ways, or maybe say goodbye to a goal because it no longer suits them. And I think when we talk about all of that, a natural question to ask is like, well, can't AI help with that? And I think, you know, I'm not going to lie, to a certain extent, yes. And Sam and I have actually talked about, you know, how could we have AI incorporated into like goal discovery, right? And so it's true. You could go right now, not get anything fancy, open ChatGPT and say, I'm an investor who's looking to figure out what my financial goals are. Can you help me? And I'm sure that you could go through a goal discovery process with ChatGPT and it would be fine, right? You probably would get something better than us running around on the street offering people $5 to tell us what their top financial goal is, right? But that doesn't mean that it's as good as what somebody would get working with a human. Right, because when we talk, we're not just saying words, we're saying other things. It's about how we say it. So I might say something, but I might pause before I say it, or I might kind of mutter it, or my body language might say, that's not really what she means. And all of those extra pieces of information, a real human, especially a trained human like an experienced advisor, can start to unpack that. Oh, they paused there. What does that mean? Or, oh, they use this particular wording. In my experience, when a client says something like that, they really mean X. How do I get them to talk about X instead of what they said? And so having that human expertise can really help have more fruitful conversations than what AI can do, because AI is just going off of the actual words that are written into the box that you send it. And I think we also see that, like, those discussing the goals, you can start to untap into what the values are. And again, now you've developed a relationship that really allows you not just to help people uncover their goals and get to those goals, but also to reflexively respond to how those goals might change over time, how people might get new goals or want to update them. Or maybe you have an idea for how to execute a goal that looks totally different than what they imagined. Because advisors have that relationship, that human relationship where they can really understand their client, what their client's talking about, what they're feeling, and can empathize with that and make sense of that, advisors are able to really give their clients more on the goal front. And that includes teaching your clients to be flexible about goals, because sometimes things don't work out and there still might be a way to achieve it. But again, sometimes that looks different than what we expect. Now, that might sound like a lot, but I think this is also where we maybe start to tap into the fact that advisors can use frameworks to help them kind of like compete with AI, right? Oh, the AI doesn't have to think at all during the goal discovery phase, but advisors can use frameworks that teams like ours have developed to help with the goal discovery process to kind of make it easier for them, but still allow them to use that human intelligence to unpack where things need to be unpacked. And so this is how we see that advisors, compared to AI, can help their clients get better goals. They can understand those goals, and they can help their clients adjust plans for when goals change, when they get upgraded, downgraded, whatever it is. And that really gives advisors an edge over AI.
Okay, so you would say that advisors still today do have an advantage over AI in the latest technology?
I would. I'm not ready to write them off entirely.
Right,
no.
okay. So they still have the advantage, and it does look like it fits well with one of the result categories that we saw, which is advice, right? Advice that I can rely on. It's ultimately, relying on advice, there still has to be that strong level of trust, which in some things AI is good at, but some things there's still question about the data that's powering that and where the answers are coming from. So maybe, Sam, you could share a little bit more on that topic of advice that I can rely on.
Yeah, and it was our biggest one for a reason. We saw the most evidence for it. It was in the most studies. And the most attributes are under that theme, and that's because it's extremely important for investors to be able to know that they can trust their advisor. They can trust in the advice that they're getting. That's not something technology can easily replace just yet. So if you look at the underlying attributes in this theme, on the surface, it might seem like these attributes are just pointing to an advisor's expertise, which can be replaced by AI, I guess you can say. But if you look a little deeper and you look at the other attributes, you start to see it's not just expertise. It's how this expertise can make them feel. So when it comes to peace of mind, when it comes to feeling like their advisor understands them and where they want to go and can fill in the gaps in their knowledge and all these other things, this is what an advisor can do above and beyond Gen AI. So it's hard to see where technology can really replace it here, because technology really leans on these cookie cutter solutions or these generalizable solutions. The general person of 30 to 40 years old, right? What can work for her. And it's really dependent on what the investor puts in, right? Put in A, B, and C, here's a plan. And as we've talked about, a lot of investors don't really know what those A, B, and C are, what attributes, what factors of their personal life actually matter for their financial plan, what their goals are. So this is where an advisor can come in and help them see in between the lines, figure out what else is important to them, what are their goals, what are their values, how else can they reach those goals. Another thing, and you mentioned this earlier that advisors can be a black box, but they don't have to be, whereas Gen AI kind of is. Yeah, even to the researchers themselves, they don't quite understand how it gives the answers that it does. Versus advisors, you can pull back the curtain for investors. This is a key way that you can build trust with investors. You can make the financial planning process more of an in-depth discussion. And that's where you understand what are the gaps in their knowledge and reading in between the lines and helping them better discover their goals and all these other things. But it's through this interactive experience that you help a person understand how their plan came about, what decisions you made. You give them a glimpse into your expertise, so to speak. Or I think it was Kitches exactly, that was trying to talk about different ways of putting the investor in the driver's seat when it comes to financial decisions, where the investor is making their plan, but with your guidance.
Right. And
in that way, you're helping the investor make a decision of why you should incorporate this factor, why A is better than B, why it's better for their future, or anything else. Like, just help them through that decision-making process. And in this way, you are, again, disappearing or doing away with the black box, so to speak. And at the same time, after these discussions, the client can feel more secure, more confident in their plan. They can have that peace of mind, whether to let you make decisions for them or as a decision maker. At the same time, it is more impactful than just throwing off decisions with Gen AI, but it's also more time consuming and resource using than just a Gen AI tool.
That's really interesting. That's really insightful. I mean, it seems like the process of advice it's not just a calculation, right? It takes a process of discovery. The process itself, right, uncovers so much. So we will have another topic just quickly here, but I want to address the audience for just a moment. Just a quick plug for the Q&A. I see there's already been quite a bit of engagement, so thank you so much for all those who are participating. But just wanted to give a quick plug again to submit your questions now, so we have the opportunity to answer them at the end. So on the last topic here that we want to talk is just a little bit more about, okay, so we've been talking about maybe this, AI versus advisor and the value points, but, how can advisors really be empowered by AI? Because I know one of the things that we see a lot is, they wish they had more time in their day to have those in-depth discussions and conversations with their clients. And so, maybe Danielle, you could share a little bit more about how AI can be used to make my advisors more efficient and give them more time.
Right. So, I mean, the stuff that we've been talking about, and Sam already mentioned it, we're saying clients value all this time-intensive stuff. They really like it when you walk them through their goals, walk them through their plans, walk them through behavioral coaching. And to your point, advisors don't have time. There's a lot of research that shows advisors don't have more time. But just because we think that advisors are distinct from AI and provide distinct value from AI doesn't mean that we don't think AI has a place in financial planning. And really what AI does is allow advisors to buy back some time. So on this slide, I'm going to be showing you our study that we recently did on how investors feel about AI and the kind of comfort that they feel about AI. And so there will be a graph on the slide that shows that we asked people about a bunch of different activities that an advisor might do. Those are on the left from top to bottom, like personalizing recommendations for your clients or doing investment research. And then we asked investors, how comfortable are you with an advisor doing this? And so you can see that in the maroon, or an advisor using AI doing this, and that's in the blue. And then along the x-axis, you see the comfort level that people have. And that midpoint is I'm not comfortable with this, but I'm not uncomfortable with it. So anything below that is people are uncomfortable with it. And what we see from this study is some good news for advisors, because we see that people don't like AI supplanting that human touch. When we look at personalizing recommendations, we see that people aren't comfortable with that. When we see personalizing emails, they don't really like that either. So that human touch type of thing is really important, and it really helps kind of make our point that the human touch is a way in which advisors can distinguish from technological advances like AI. But there's also good news in terms of using AI here, where we see that there are some situations where, people are perfectly comfortable with it, right? So doing things like drafting marketing materials or writing educational resources, some more technical things that can kind of eat up advisors' times. I mean, especially like marketing materials, most advisors are not experts in marketing. And so it can be really helpful to have a tool that understands it a bit better than you do to help you do something that is integral to your practice, but is not your main value add, as we just discussed. So basically what we see is that people really like it when advisors can use AI for technical purposes to become more efficient, which is good because then they have more time to spend with their clients to do all those soft skills we've been talking about, to add all that human value. And at the Morningstar Investment Conference in June, later this month rather, Sam and I are actually going to be discussing this study in particular quite a bit more, especially because I know people might see the emails not looking super hot there, and you might be wondering, well, I would really love to have AI write emails. What should I do? But we're going to go into more depth about what does it look like to use AI in your practice in a way that's really cognizant of your client's comfort and handles it deftly. But really what we want advisors to remember is that the way that they are distinct from AI and the value that they add beyond AI is in providing those soft skills, that human connection, that relationship that AI just cannot provide. But they can use AI to help them buy back time to do that better. And so I do want to give a little bit of a plug for the papers that we've referenced today. We have the QR codes available for it. The main one is the one where we talk about understanding what investors value from a financial advisor, but then we also have our piece on AI and financial advising. So feel free to read those, dear audience, so that you can learn more about what we found here. But another thing that I want to plug is our behavioral research circle for financial advisors. And so we also have a code for you to scan if you're interested in participating in this. So let me tell you a little bit more about what it is, because that doesn't necessarily mean anything to anyone beyond me and Sam.
What is the circle? Yes.
Yeah. But basically, as you can see, we hear from investors, clients all the time. That's our bread and butter. We get a lot of research from them. But what we're looking to get more of is research that really speaks to advisors and understanding what snags they hit, what kind of roadblocks, what's on their mind. And so advisors need to be able to have a voice in our research is essentially what we're looking for here. And so the idea behind it is a couple times a year, like literally twice a year, we'll send advisors in our research circle some survey. They're short surveys and they're totally optional. And they will ask advisors about different topics that are on our minds, on their minds, so that we can get better data that reflects the experiences of the advisors who consume our information, who are looking to do right by their clients, who want to know more about how behavioral science can help them do their jobs. And if you participate in one of our studies, we will give you early access to our reports, our results. It's kind of a little thank you for helping us out. And if you don't participate in a study, that's okay too. You won't be taken off the list. Nothing bad will happen. We won't have Zeus strike you down from on high. You'll just not get the early results for that one. And next time, if you want to participate, you're welcome to. So I wanted to give that little plug before we move to Q&A as well.
Well, that sounds like a terrific opportunity, and great to see that you're doing terrific research, obviously, that impacts the industry and ultimately impacts so many different lives, right, and investors and their clients. So want to move to the Q&A. We had quite a bit of questions pop up, so let's see some of the questions that we have. So thank you all those who submitted questions. So here's a good question for you folks. So, how do clients perceive the use of AI in financial planning, right? So how can I address any concerns that they might have? So there's a little bit of maybe some of the last results you had on what are investors comfortable with using with AI, but maybe you could share a little bit more on the financial planning side.
Well, some of the use cases that we included in that study were directly from financial planning. So what I will say is that if you're really curious about this question, come to our session at the Morningstar Investment Conference, because we'll be tackling this exact topic. And as takeaways for that session, we're also planning on helping advisors decide what Gen AI tools to use with these insights in mind, because so much of the industry is focused on what can Gen AI do, what can Gen AI do for advisors, and no one's really talking about how this may impact what investors think of their advisors. So that's what we'll be tackling there. We'll also be going over an example of how advisors can use Gen AI directly in a way that doesn't rub investors the wrong way. So definitely come to the session.
Yeah, as like a little bit of a teaser, what I'll say is like we already talked about it today.
Yeah.
AI is a black box. Advisors can be a black box. And so if you're an advisor using AI, you can imagine that your clients might feel really at loss in terms of like, what is going on here? How does my financial plan get created? How is my portfolio rebalanced? I don't understand what's going on at all. And so really, just like as one of the takeaways that we do, I know Sam's like, make sure that they come to our session. But I will say that one of the things that you want to do if you're using AI in your practice is to be able to have open conversations with your clients about your use of it, what kinds of things you're putting in place to make sure that it's giving you good results, that you're giving your clients something that really reflects them and is beneficial to them. It really is going to be about kind of that open communication. So I think hiding it is one of those things where it's like, well, then if they find out, you don't want them to be mad, right? So having those conversations, making sure that people don't feel like, I have no idea what's going on here. Because again, people want advice they can rely on. And if they have no idea what's going on, they're not gonna feel comfortable with your advice.
And it does seem like there is a bit of skepticism sometimes in the way that we interact with AI. I know that when I receive emails, for example, I look at it and it's like, did they really write this or was that AI, right? So to your point, yeah, they kind of have to be honest about the AI tools that they are using so they can feel like, was this really a personalized note that my advisor sent me or was this just an automated message, right?
Don't insult their intelligence, right? Yeah. We all see AI generated stuff all the time right now. And if you're thinking, well, I personalized it, I had the AI personalize it, they won't know.
They'll know.
They'll know.
Yeah.
You know when you get it.
Right. Well, that actually leads to the next question that I see here that we have, which is a good question, which is, what types of frameworks are most successful when proving, our worth as advisors to AI? I'm not an advisor, but an advisor asked that question, proving their worth versus AI. So I know we touched on this quite a bit already in today's session, but what are again some of the things that stand out?
Well, I think it comes back to using those interactive exercises, and that's something our team, maybe I'm biased, because our team really focuses on building up those tools, like the goal generation tool or the value generation tool, and these tools that help an investor think more carefully about their own finances, but through a discussion with you. So you're building that connection to clients already, and you're building trust along the way. And then hopefully with that in mind, you don't really have to prove your value. And it's something that Gen AI can't really do. Gen AI doesn't understand a response. When Gen AI responds, it's just guessing the next word. And investors want to feel understood. Yeah. I think those tools can help with that.
Yeah, and just to, another tool that I think can be really helpful for advisors who are trying to really kind of articulate how am I different from AI is in our Why Investors Hire Their Financial Advisor study, we have a takeaway that is about helping you walk through your value proposition as an advisor. And I think that is a really great exercise to go through, especially keeping in mind, like, I want to be able to make sure that I'm standing out from AI. And you can take the results from this study and you can take that value proposition makeover, as it's called, and you can start to think, okay, what am I doing for my clients? And really start articulating it for yourself, because being able to articulate that not only gives you a nice new value proposition that you can put on your website, but it also—
all your communications?
Yes, and all of your communications, but it also really helps you kind of recenter on what I want to provide my clients, what is at the core of our practice, and what is like our philosophy for financial planning.
Yeah, very helpful, very helpful. Well, all these are I think, kind of related questions. So as I ask these questions, it seems like we're just going to be continuing to dig into the topic. But the next question is, what type of process would you suggest for an advisor's process for reviewing and ensuring the accuracy of Gen AI outputs to avoid errors or misinformation? This is something that I see come up, especially in my world where advisors are evaluating technology is, how do I trust the answer that's being put, right? One of the things that I've seen, at least, and if I could answer first.
No, go ahead. No, we love your answer.
For one, is, will the tool cite its sources, right? So, where you can pull the information is coming from, and then can you click on that source and find that information to learn more? It seems like that has done a lot to build trust, but what else have you seen in terms of like what advisors can do to, have trust from those answers or at least interpret some of that data?
Right. So citing sources is very important. I certainly have asked Gen AI to cite its sources before and discovered that those sources don't exist. So make sure that the sources exist.
Check this, so not just rely on the
not just say, oh, wow, it gave me a little resource. Right. No, actually put it into Google and make sure that it exists. Very important. But another thing is to be careful if you're having Gen AI do math for you. It's not, it's a language model, right? Not a math model. And so Gen AI can do some math, but really what it's doing is it's plugging it into another code, like using Python or something like that. And so if you're having it do number crunching for you, one, I would suggest maybe don't do that. Yeah. But two, if you are, make it give you the math that it's actually doing.
The steps.
Yeah, the steps that it's actually taking so that you can double check the math. And I think that that's a huge piece in terms of like ensuring the reliability of what you're getting. So getting sources, be it, the math that's happening or the information that it's drawing on to give you an answer. Those would be my top two things.
Yeah, I think the only thing I would add is that there's no shortcut to human review in this case.
Yeah.
You still have to read it over. I think that comes back to tools that use Gen AI to automatically send out an email or send out a note or anything like that. You still have to read it. There's no replacement for that human review element, which is still more time consuming, but Gen AI is not supposed to replace humans, right? It's supposed to augment humans. It's supposed to make things easier, not a replacement.
So check the sources, check the math,
Yeah.
until there's an AI that checks the AI, I guess, and we can go on many layers on that one. But so this one next question is a little bit more on the methodology, which I think will be interesting here. So, do you find demographic differences across some of the responses regarding, social desirability biases, age in particular, right? So anecdotally, this question is saying is that, they've noticed older clients being more wary of behavior approaches compared to some younger clients. Maybe the older folks aren't as open to embracing some of these new techniques. So could you share a little bit more about the demographic differences you've seen in your studies?
Yeah, so we always take a look at demographic differences for our studies. In particular, I think that was the ranking study because that's where social desirability came out the most. And we didn't actually see any demographic differences in terms of what they valued, what they didn't value. The overall average ranking score seems to say consistent, regardless if we're splitting up the data by different age groups or gender or things like that.
Yeah, but I will say if you're an advisor in practice and you might be noticing, older clients might be feeling a little resistant to things. I mean, that's very possible still, right? Because at the end of the day, even though people might have some desire to look good to themselves, they don't know who we are when we run a study, but they do know who you are when you ask them a question or when you posit, hey, I want to do some behavioral coaching here, or however you do it. And especially with older clients, right? Typically we associate getting older with becoming wiser, gathering more knowledge, things like that. And so it can be a little difficult for people when, especially if they're interacting with somebody who's younger, perhaps you're a financial advisor who's younger than some of your clients, it certainly happens, that they might not want to seem like they need additional help because they should be wise enough to not do it. But it's not about wisdom. It's about having a human brain. And I think that if you're meeting resistance from clients, again, taking it away and talking more about examples of what it looks like.
The framing matters.
Yeah, the framing matters, the times in which you've helped your client make better decisions, the ways in which you support decision making, really making it about examples as opposed to like labels can really help make people feel a bit more comfortable. Or maybe you just start doing it and you don't tell them what you're doing. You might say, hey, I wanted to bounce some ideas off of you today. Here are a couple of decision options, investment options I have for you. And you've laid out this nice tool that kind of like
a decision aid
of sort, right? And so really play around with the framing if you're struggling with that, because I think that, again, people want to look good. And so if they're resistant, it's probably just because, they don't want to make it seem like they're not somebody who's in control of themselves, which I also don't want to seem like I'm not in control of myself, so I get it.
I'm also curious if it's this resistance to change too. So if they're older clients and you've been with them for a long time and you're trying to change how you work with them, they may push back a little bit versus newer clients, they may be more on board with trying a different technique because they haven't worked with you for years. So that could be a possibility too.
Yeah.
Well, it's interesting seeing the analysis on that, and it's good. Obviously, that's incorporated into the studies, and so thanks for answering that. Next question is going to be a little bit more on the trends that we're seeing, specifically in technology. So, where do you see the future of robo-advisors, and how will this affect client financial planning for advisors? I know you'd mentioned at the beginning of the discussion, right, about how, I think it was back in 2013, if I recall, that when robo-advisors were really getting a lot of press that, is this going to totally replace financial advisors with this trend? But here we are 11 years later, and advisors are still going strong. So, where do you see AI impacting potentially the robo-advisor space? Is it going to reinvigorate, kind of make those services more valuable?
Well, I think there could be a possibility that way. I think it's interesting to see how Gen AI can impact robo-advisors, because right now it seems like robo-advisors are definitely not having the future people thought they were going to be. And I think it's partly because of that personal relationship advisors have with their clients, and robo-advisors can't really replace. But let's see how Gen AI gives robo-advisors a new life. I think there could be a possibility there. But again, I think it's still going to come back to financial advisors using this different technology to better serve their clients. So maybe financial advisors have a incorporation of a robo-advisor in terms of helping automate the investment advice, but you're still very much in charge of that soft side of financial planning. I think it's going to be similar with Gen AI in terms of financial advisors using Gen AI to automate some parts or make some parts faster, not automate.
Yeah.
Correct myself, but still just augmenting advisors, not replacing.
Right. I mean, I think what we've seen is that robo-advisors kind of don't take business from advisors. Really, they serve as a bridge from people who are not advised to getting advised, right? So it's giving advice to a group that is maybe not receiving advice, but is on its way to getting to the financial advisor. And so I suspect that because of the things that we've talked about, it might make robo-advisors a little bit more appealing to people who maybe would fall into that group but don't. But I still don't think that it would really take away from current advisors' practice, because that relationship is just so important to the value that people derive from working with an advisor.
Very interesting. Well, this has been a terrific discussion, and we actually have a number of questions left. Unfortunately, we won't be able to get to those questions, but I would encourage you, if you do have questions, this is a quick plug also for the Morningstar Investment Conference. So if you want to meet with Sam or Danielle in person, you can attend their session, ask them questions. I'll also have another session on AI separately, but do encourage you to attend. It's at Navy Pier in Chicago, June 25th and 26th. It's free for financial advisors, but it's open to anyone in the financial services profession. So definitely would encourage you to check it out. Also, last week of June in Chicago is one of the best places to be in the world, I would say. So, there should be some more information and links about the conference, about the research papers that you both have. But I thank you so much for sharing your knowledge and sharing your research. And thanks, everyone, for joining and attending today.